the institutions, the hedge funds, the sovereigns, they park their money into treasuries. And when they can't get a positive return on that, why should they own it? So maybe they're going to get 0.5%, but when you account for inflation, they're guaranteed to lose money. So if you're a sovereign, a hedge fund, whatever, and you're guaranteed to lose money on treasuries, or I could hold gold without losing money, which one would you choose? You would choose that. And so we're starting to see this big shift because of the Fed policy, not only printing money, destroying the currency, but also the interest rates, and it's getting people to buy.
Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update. And with us today is market analyst Mark Moss from his YouTube channel, and he's also the host of Market Disruptors. Mark, thank you so much for joining us today.
Yeah, thanks so much for inviting me on, Elijah. I'm looking forward to it.
Definitely. Now, I was perusing your YouTube channel, and wow, over 150,000 subscribers so far, and the videos are such high quality and great content. If you just wanted to share a little bit about how you got into the financial industry, and yes, started producing such great educational YouTube videos.
Yeah, sure. So, a lot of it, I guess, goes all the way back to my childhood. I mean, I kind of grew up with, my dad was a contractor. Maybe you want to call it entrepreneurial. I had to start making money when I was a kid. So I've always kind of had that bug. When I was 18 years old, I started buying bank-owned repos, fixing them up and selling them. So kind of just jumped right into like what you may call real estate investing. And so did really well with that, invested through the dot-com boom and then the subsequent bust that happened with that when I was pretty young. I think maybe just in my 20 or so like that, early 20s. And then I continued with real estate and businesses and managed to do really, really well for me. I figured out how to make money. By 2008, with the great financial crash, I got wiped out. And it made me think, wait a minute, like I've figured out this making money piece, but what is this whole financial system thing? Like this is like a rigged game. Like I need to figure this out. I can't ever have this happen to me again. And so it made me just dig deep. And like I said, I kind of committed to myself, like this will never happen to me again. And I just got married and just had my first kid, and like I was set in life. And then next thing you know, I wasn't. And so I had this vested interest to really figure this out. So I started digging into the financial system and how it worked. And the more that I figured out, the more I learned how bad things were. And really what it led me to was gold. And it really led me to the need to have a sound money system, and how really not having a sound money system is the cause for every problem that we have, not just financial problems. Almost every problem can be traced back to the money system. And so I became I just started devouring content, like I said, around hard money, the financial system. Fast forward a few years, and I was actually going down a path. I was following a newsletter called Sovereign Man and a guy named Simon Black. And it's really about being a sovereign man, controlling yourself, and not just like you wouldn't put all your money into one stock. Why have your whole life in one country? And so I started looking at ways to kind of diversify my life, kind of like a sovereign man. And I had been kind of following what Bitcoin was doing for a couple of years. And by 2015, I was working on setting up offshore bank accounts and trusts and all these things to diversify out of the United States. And I took another look at Bitcoin and I said, shoot, that's kind of the same thing. And so I moved into Bitcoin. Of course, it was new at the time. I started talking a lot about it, and one thing led to another. And here I have the YouTube show. But really, it came from that desire to learn what the heck is going on in the financial system because of a vested interest of me losing my money and trying to get it right the next time.
Yeah, definitely. Your story kind of resonates with me. It kind of started with learning about the financial system, and for me, it was like learning about how money is created. That the Federal Reserve, and there's this whole controversy: is it part of the government or not? Whatever, but they can just create money out of thin air, and that devalues the dollar. And over time, value is reduced in our dollars. So it's like, how do you protect yourself? One of the ways is to invest in gold, and we're seeing, as this kind of starting, it seemed like with the pandemic, people kind of getting a bit scared, like what happens with the financial system here, right? And people wanting to move into gold. So what we've been seeing, we saw quite an increase in the gold price, hitting new all-time nominal highs, above $2,000. What do you make currently of the current action in the precious metal markets? And I know you've talked about on your show that there are a lot of bullish reasons to own gold right now.
Sure. Yeah, I talk about gold quite a bit. You know, they say smooth seas never made a skilled sailor. And so what that means is that we learn from our failures, not our successes. And so when everything's going good, like I was when I was starting my career and investing through real estate and the market was just crushing it, everything was fine. But as soon as you run into problems, you get interested to find out what the heck is going on. And so Bitcoin was really created out of that. Then, after 2008, 2009 crash, we started kind of going again and people kind of forgot about the financial system. But again, as you said, with the pandemic crashing again, now people are starting to go, wait a minute, what is going on? And so it's really those problems that cause us to dig deeper. And it's those problems that expose all these reasons why we need to go back to gold. So you ask about like some of these drivers, and it's two things. It's one, the system that we're built on is flawed because we don't have a standard unit of measure. We don't have like this standard unit of account. So that's flawed. And then two, the response to these problems. And so these response to the problems push that narrative even more. So what's funny is like going off of a gold sound money system and creating unlimited amounts of debt is what's caused the problems that we have today. The gap between the rich and the poor, financial inequality, things like that, why the middle class continues to shrink, all these different things. But then when we have these types of problems, they just give us more of that. And so when they create debt, they fill it up like a balloon, they inflate the money supply, which as you just said, right, it makes each of those dollars worth less and less. And basically, people are just asking themselves, where can I go to protect myself? One of the big things that's really changing now versus like the last kind of bull run that we saw from, say, 2008 to 2011 is we're starting to see a lot more institutional involvement. And the reason why that's a big deal is, of course, they're the big buyers, right? They're called the smart money. And they almost have to kind of start following the leader. So what's happened is now in 2020 is that interest rates are basically at zero. The Fed says they're going to peg them to zero for, 3 to 5 years. And what happens is, the institutions, the hedge funds, the sovereigns, they park their money into treasuries. And when they can't get a positive return on that, why should they own it? So maybe they're going to get 0.5%, but when you account for inflation, they're guaranteed to lose money. So if you're a sovereign, a hedge fund, whatever, and you're guaranteed to lose money on treasuries, or I could hold gold without losing money, which one would you choose? You would choose that. And so we're starting to see this big shift because of the Fed policy, not only printing money, destroying the currency, but also the interest rates, and it's getting people to buy.
Definitely. And what about silver? Because you've also talked about, you had a video on silver and you said that there are actually different reasons to buy gold and silver. They do trade, it seems like, in lockstep fashion a lot of the time. And silver is kind of known as the one that kind of catches up after gold makes its move, and it makes it moves a lot more than gold. When gold moves up, silver moves up more, and when gold falls, silver falls more. So, but ultimately, fundamentally, there actually are some different reasons why to invest in silver versus gold. Can you expand on that?
Yeah, I'd love to expand on that. I made a controversial video, and I said, silver is not what you think it is. I think was the title of that video. I think it's got 500,000 views, something like that. And basically, the point of that was to say silver is not what you think it is, and it is fundamentally different than gold, exactly what you said. And so what happens is most people that are want to invest in silver look that throughout history, through thousands and thousands of years, gold and silver had this ratio. And it averaged about a 15% ratio, kind of up and down a little bit. And right now, well, I think 6 months ago, I think the ratio was almost like to 100, 90 to 100. And so a lot of these silver investors think, oh, well, fiat money, fake government money is fake. Real money is gold and silver. And eventually this ratio is going to come back in line, which means if it goes back to 15 to 1, silver could go way up. So that's what people think. And I made this video to say it's not what you think it is. And what I mean by that is that through thousands of years, gold and silver worked together. And that's why they had that ratio. And gold was really good for big denominations, and silver was good for small denominations. But something changed. And what that something changed is kind of technology. And what I mean by that is gold was too big to be used in transactions. And so we put gold into banks. And then we started using paper gold certificates, which then eventually became dollars, which eventually became debit cards, which eventually became wire transfers, et cetera. And the need for silver is gone. Silver was needed for thousands of years, but it's not needed anymore. And not only is it not needed, it was actually demonetized. So everyone says, well, only gold and silver are money. Look at the Constitution. Well, gold's money. Silver was demonetized. So not only was silver demonetized, it's not needed anymore. And so I'm not saying it's not a good investment, but as you ask the question, the fundamental reasons why are different. So people buy gold because gold is money. Central banks buy gold because it helps with their reserves. Hedge funds and institutions buy gold because it hedges their risk and whatever, right? The reason why people buy silver is because they speculate that it will eventually catch up to gold, right? So they're buying gold because of what gold is. They're buying silver because they speculate, they hope that it's going to catch up to gold. Does that make sense?
Definitely. And one of the things is the gold silver ratio, right? It's some people say it's been out of whack, right? It's way higher than it normally is. If you look at, some people say the ratio should be around 40 to 1, but if you actually look historically, it's around 12 or 15 to 1. What is your perspective on, do you think that silver is more undervalued today because the ratio is around 70 or 80 to 1?
Well, that's what I was saying. Historically, yeah, it was 12 to 15. But I believed, as I said, the need for silver is done, right? We don't need silver anymore. And that's why that ratio is no longer there. It was demonetized. So, as you said, yeah, the ratio got up to 90. I don't think it will ever go back to 15. I mean, maybe for a minute before, if we look in kind of like more modern times, I think maybe a 50 to 1 ratio is more realistic. But again, I think going off of the ratio is you're betting, you're gambling. It's a speculative bet. Gold has a fundamental reason why you should buy it. Silver is a speculative bet that it moves with gold. You buy gold because gold moves. You buy silver because hopefully it moves with gold. And so if I had to guess, I mean, maybe we see the silver ratio getting back down to about 50, and then maybe settling back up in the 70 range. Maybe we could see that. I don't really know, but somewhere in there.
Definitely, yeah. That's a very interesting perspective. Is essentially that silver isn't needed anymore as a monetary asset.
Well, and we can see this in the market. And so, we can sit here and always speculate, but really we look at what does the market tell us? And so we know that in the market, 80% of silver is used for industrial uses, whereas gold, very little is used for industrial uses. So gold has this monetary premium. People buy it because of its monetary properties. Most people are buying silver for its industrial uses. And so you just look at the way that it's used, look at the way the market's participating in it.
Definitely. Now, I'd like to move to how to invest in precious metals. You actually had that in your video about gold. There are a lot of different ways you can buy the physical metal, and you can also buy stocks, and there are different kinds of stocks. Can you walk with our viewers through kind of the different ways to invest in gold?
Yeah, sure. So, so I do like to invest into gold. There's a lot of reasons for that. But of course, as you said, there's different ways to do that. So I kind of break it down into like 4 categories. And so you have the physical gold. And then I guess the other categories are gold stocks. And then I break those gold stocks into like 3 levels. So you have the major producers, kind of the junior producers, and then like the junior explorers. So those are kind of the 3 layers of stock. So the junior explorers are the ones trying to go find the gold in the ground. The junior producers are the ones that are taking those explorers and starting to get them to produce a little bit. Then it moves up to the major producers. And then, of course, you can get the physical. So those are the 4 different ways that I look at it. I mean, so physical and stocks, and then broke down those stocks. Now, a lot of people, and I see these comments, thousands and thousands of these comments on my videos saying, you have to own physical. If you don't own the physical, you don't own it. If you don't have it in your safe or whatever. And there's truth to that, right? So of course it's nice to hold it in your hand, hold it in your safe, hold it at home. When you have someone else store it for you, hold it for you, there's counterparty risk. They could default on that, they could steal it, whatever. So there is some truth to holding it. However, maybe depending on your living condition, holding it isn't the best option for you. Maybe you live in a safe in a place without a good, safe condition. Maybe you're traveling all the time. But I think the gold miners are the way to get asymmetric returns to the price of gold. So gold, owning physical gold is great for like a doomsday scenario. If the world ends, I have physical gold in my safe. Owning stocks is really about growing my portfolio. And so when the price of gold jumps $200, you could see the price of these gold miners go up 100% or 200%. And so that's a big difference.
Definitely, the leverage that you get from the stocks is quite significant sometimes.
Yeah, it's quite significant. And of course, investing in it is different. So the fundamental reasons why physical and gold miners go up are the same, but you own them for different reasons. And so you always want to know before you buy something, why am I buying it? How does it fit into my portfolio? And then what am I doing with it? So I would own physical gold and I would own it in my own safe for those kind of insurance reasons. Like if the world ends, I have this physical gold. But I own the gold stocks because I believe it can go up 100, 200, 500%. So they're both going up for the same reason, but I own them for different reasons.